Hello and welcome back once again. Hope you had some quality time with your friends and family over the new year, the first day of the new year. And today we are going to be taking a closer look at Baidu. You may have noticed recently that I have been discussing Chinese stocks a lot. And the reason why I'm doing that is because I feel that Chinese stocks right now and companies are basically a bargain. Many of them, at least. Obviously, not everything is a bargain, but some of the bigger ones, like Alibaba, for example, I created a video about Alibaba and I pointed out why I actually purchased it myself. And likewise, I wanted to make a video about Baidu, which is a very well known search engine and other things. It's almost like Google, the Google of China, basically. It's not an international company yet, but why not? I mean, it could potentially become a bigger power and maybe a direct competitor to Google, really worldwide. Who knows? But right now, the Chinese market market is obviously very lucrative, and it's a very big market. And so we want to examine the stock and see whether it makes sense for us to purchase it based on its financials. And we obviously don't just purchase everything. We want to make sure that the price of the stock and all the other financial aspects of the company make sense for us to get into Baidu. And this is what we're going to be doing in this video as usual. So Baidu right now seems to have dropped quite a bit, almost 31% last year, more than 31% really. And his last 12 months has a PE of 25 almost, and next 12 months it's projected to be 17, which is fair. And the first thing that I want to examine is the outstanding shares to see whether there is a steep increase or reduction. This seems to be at a range of 353 to 335. I wouldn't be terribly perplexed about that. I think that's fair, and it probably doesn't make a lot of difference really, because it seems to be going up and down mostly in that range. So there's not much dilution going on, neither much of a buyback. So I probably wouldn't even mind this one for this specific stock. The interesting thing is the market cap, which is 52 billion, and it's important to keep that in mind. That's an important metric because we need to know how expensive the company is. And it's also worth noting the projections over here, that it seems to be a year over year growth change, basically. That's about 13% or like 15% on average in the next 3 years or so. So this is interesting, and it seems like the projections for the EPS, earnings per share, are also good for the next few years. So that's nice to see. But let's take a little bit of a closer look here and take a look at the income statement. So for the income statement, we definitely want to be taking a look at the net income of the company, which is obviously the most important thing. And as we can see here, this goes back to 17 to 20. As you can see here, in the last 4 years, the company's net income is in the positive, with a little bit of a slump here in 2019, but again, starting to grow normally as the company is growing based on the previous years. And it's interesting to notice also that the year-over-year growth here stalled in 2019 and actually it went negative, which is not great. But in 2020, again, positive and very positive, kind of simulating it being closer to 2017, which is nice to see. And so the net income of the company seems to be getting better and better right now, which is nice. Okay, let's take a look at the balance sheet. Balance sheet is important because it can point us to how many assets the company has, and by that we can see in what financial position the company is, and if something bad happens in the economy, how many assets they have to potentially help them with staying afloat. So that helps a lot to know. So the total assets of the company seem to be growing. The total assets is basically a combination of the current assets and the non-current assets. The current assets are the ones that can be liquidated very quickly, like cash and cash equivalents. The non-current assets are like long-term investments, like for instance, long-term bonds, for example, would be an investment of that sort. And then the total equity, which is the most important thing, is also growing at a fairly nice rate, from 20 to almost 30, 29 in 4 years. Not bad at all. Company seems to be growing, not exponentially, but seems still growing normally and nicely. And the cash flow statement here, we can see that the cash from operations shrunk a little bit in 2019 and 2020. We would expect that. We saw that 2019 was not a great year for Baidu, but again seems to be going in the positive. And with the suppression of the current stock price, it may be an interesting entry right now, since the cash from operations is shrinking a little bit, but it doesn't seem like it's completely stalling, or I doubt it's gonna have many issues in the future, especially when we examine the potential growth in the next few years in the previous tab, which was like 15 to 18%. So cash from investing, the company seems to be investing here quite a lot. Investment in the market and equities. That's a nice move here for sure. And here, and yeah, so not much more to say. Repaying some loans here. Okay, so that's good to see. And cash from financing here. This was in the positive, so they incurred some debt here. Yeah, they issued some debt, as you see. We will examine debt in the solvency tab a little bit later, right after, actually, after we're done with the free cash flow here, which we'll examine here, the free cash flow. 4.3, 3.9, 3.1, 2.9. A decrease of the free cash flow, which we would expect based on what we have seen so far. But remember that the forward P is also pointing to a lower P, so we expect this free cash flow to increase in the next few years based on the projections, so that's nice to know. And let's actually get the 4-year average here of the free cash flow. 4.3 plus 3.9 plus 3.1 plus 2.9 divided by 4, $3.55 billion per year is the average cash flow in the last 4 years. And the multiple that I would potentially give to the free cash flow for such a company like Baidu, I think it's a company that seems to have stalled in terms of growth, but it's a tech company, and tech companies are generally speaking okay with with higher multiples, I suppose. So I wouldn't mind giving it a higher multiple. I mean, it's like a communication sort of company. It has like a search engine, so it has potential growth. It has potential actually margin for growth. So and at the current environment, I don't think it's indicative to make a final decision about the potential growth of the company. So I think a multiple of 15 to 20, even 20, I think I'm fine with paying for this company, especially at the current stock price, I feel. So if we multiply that by 20, we get a market cap, an expected market cap based on the free cash flow, the 4-year free cash flow of 71 billion. And right now we are at 51 billion, 51.79. So based on the 20 free cash flow multiple projection, basically, we are looking at a company that's undervalued in terms of its stock price. So its stock price would have to be higher in order to reach the expected multiple here. And if you wanted to know what kind of stock value we would expect here, you can basically get the outstanding shares of the company and multiply it to the expected share price. That will give us $71 billion. It's basically a very simple equation, a very simple division, really, that you can do if you want to discover it. I'm guessing it must be around 170 or so, maybe even more, actually, if I take a look at the outstanding shares. So yeah, it looks like the company and the stock price basically is undervalued based on the free cash flow that it generates right now. Take a look at the solvency, which is basically the debt of the company. At 33%, anything below 50, generally speaking, is fine. Generally speaking, and you also kind of want some debt for companies, because debt sometimes, many times, actually means growth. Most times, actually, for these kinds of companies, unless it's too much and cannot be, sold for. So if the company has like a 200 here, that's a problem, or even more than 100%, because it has more debt than it has equity. So if something happens, they have a higher chance of default. So you can also take a look at the Altman Z score, which is a quick bankruptcy risk assessment. And anything that's close to 3 is good. Anything below 1.5 tends to be closer to bankruptcy, and below 1, it's we're getting into the danger zone. So right now, this used to be better, but it's still fine, close to 3. So yeah, what would I do with Baidu? Right now, I don't know if I would buy it myself, because I have a lot of exposure in some Chinese stocks and the Chinese market right now, especially with my latest purchase of Alibaba. However, if I were to allocate some stuff on this kind of portfolio of Chinese stocks that I wanted to get, I would think that I would add some Baidu, and even now I'm even potentially thinking of adding a little bit. So, especially if I hadn't added Alibaba, I would more than likely add a little bit of Baidu. But I think I may actually think about it in the next few days, especially if it gives me a little bit of a better price, like 140 maybe, or less, because right now the market is on discount in terms of Chinese stocks. I would really think about getting into Baidu. But for a neutral spectator who is looking to potentially invest in Baidu, I would say that it's a potential good opportunity, and I could see myself getting into it for sure. So it will be a buy for me right now in this level, and obviously the lower it gets, because it has some potential to get lower right now with the current turmoil in the markets. I think it would be a fantastic opportunity, really, to get Baidu and hold it for a few years as a long-term investment. What do you think? Would you buy it? Do you own it already? What do you think about it? It's always a little bit. I'm always a little bit hesitant about Chinese stocks, just because of the reported data. I'm not sure if it's exactly accurate, and that was the whole reason about the US and China conflict there, in terms of some of the companies and the DDD listing that happened lately. So there is a little bit of a risk there, which you have to be aware of. This risk is slightly mitigated actually probably massively mitigated with Alibaba, because some high-profile investors like Charlie Munger owns Alibaba, and a lot of it, and so I'm much more confident in investing there. But still, I mean, if the data is accurate here, I'm definitely going for Baidu at this level. All right, thank you for watching, and if you did enjoy, please leave a like and subscribe. There will be many more videos about different kinds of companies and stock market news, which I love talking about. And if you did enjoy this one, you may want to take a look at this video that I created about Lemonade stock, and I'm examining whether it's worth the squeeze. So again, thank you for watching, and I'll see you in the next video. Bye bye.